the benefits, what are the key risks as well? Let's talk about that associated with investing in SIF.
I think the biggest risk is the flexibility which we have got right now in
Okay.
mutual fund because it was tightly regulated. Your expected outcome was within the, you can say, category approach.
Hmm.
Here, as I said, client will be coming into equity long short fund. We'll just take
Hmm.
example of one of the category, which is
Sure.
equity long short fund. Now,
Hmm.
equity long short fund is defined as 80% minimum has to be in equity. That is
Hmm.
the single line definition of equity long short fund. Now, 80% always have to be in equity. As a fund
Equity.
manager, I can choose to run 80% large cap. You can
Hmm.
choose to run 80% micro cap. Someone else will come and write 80% small cap. Someone will come and do 80% arbitrage.
Right.
And that is why you will see the amount of difference in our portfolios and the
Hmm.
expected returns can be huge. That's
Hmm.
why you have to actually study each and every category. You
Hmm.
don't cannot just look at the name that it is equity long short or hybrid long short and invest blindly. Because as I
Right.
said again, unlike large cap fund where 80% will be into similar 100 stock, here
Hmm.
that 80% can go anywhere. And that's why you have to deep dive into each and every strategy. Second, all the risk associated with derivative, though it is
Hmm.
just 25% of our portfolio, but if you are not utilizing it properly, can be a double-edged sword. Your longs can still go up and your short can still go up, and you will lose money on both the end because you are underweight on long position and you have taken 25% directional short. So in a bull
Hmm.
market, both can backfire for you. Third, as I again mentioned in the beginning,
Hmm.
uh, fixed income investor have got some leeway because our limits have increased on single issuer, whether it is triple A, double A, or a single A. Now that
Hmm.
again I said is a double-edged sword. Sometimes concentration helps you, but sometimes concentration is also risky, as we have seen what happened with some of the issuers in 2018. So if that kind of situation happen, the limits are much higher, and if someone take that full exposure, the downside can also be significantly higher. So that is something again you have to look at individual AMC to AMC that how they are trying to utilize this flexibility given to them in a
Hmm.
proper manner so that your risk goes down and not other way around.